What's going on, guys? My name is Jeffrey Rodriguez, and in today's video we're going to be talking about mastering the Fibonacci levels. Alright guys, so if you haven't heard of Fibonacci levels before, or if you have and aren't really familiar with how to use them, we're going to go over all of that in this video. Real quick guys, if you're new to the channel, make sure to hit that subscribe button because I do post daily educational videos as well as weekly market analysis videos. So make sure to hit that subscribe button so you can stay up to date with the latest videos. Alright guys, so with that being said, let's go ahead and jump into my computer and we'll look at the charts and we'll go over Fibonacci. Alright guys, so for this example we're going to be using USD CHF, so this is dollar Swiss. Fibonacci, if you're not familiar with it, it's just a term of actually like measuring out swings or figuring out how deep a retracement of a swing will be, a retracement or a pullback. So just as an example, how you would do it is you would draw it from a high to a low point, and there's a lot more detail that we're going to go into with this. I just want to show you guys what it looks like and the levels that I use to start off with. So you would draw it from a high to a low if you were measuring out this swing here and looking for a retracement. And the levels that I use are the 50% level, so 0.5. And if you guys want to see my settings, I'll go ahead and pull those up. I actually have another video that I did on Fibonacci trading as well that I'll link below, and if you guys want to check that out, you can. So the levels that I do use are 0.5, 0.618, 0.705, 0.79, and 1. And those are the only levels that I keep on my charts. I don't actually use any other levels for my fibs. I was testing out a few levels like 38.2 and stuff like that, but I didn't find too much success with them, and I would prefer to use these levels. So in terms of how you would actually use this, what you need to do is you always want to start with a daily time frame or a higher time frame depending on what type of trader you are. For me, I'm mainly a day trader, so I stick to the daily time frame, but if you're someone who mainly takes swing trades or longer term trades, then you may actually want to look at the monthly or the weekly and base your analysis off of that, and also the swing and the possible retracement within that trend. Alright guys, so for this particular pair, what we're going to want to do first is figure out where we're at in terms of the range. So if we map out our fib exactly where we had it from before, this high here down to this low, and the reason I'm using this swing here is because this is where the market is trading within. So there's no need for me to pull my fib all the way back here yet because the market actually isn't in those price levels. The market is trading between this price level here, 0.91884 and 1.00402. So those are the two levels that the market is actually trading in between. So that's where I'm going to focus, and that's where I'm actually going to map out my fibs. So you can see here that the market made a full 100% retracement, forming what most people would see as a double top, or forming an M pattern, or whatever people like to call it. Since this market did make a full 100% retracement, there was no valid trade setup. So we would have been looking to actually trade the market when it was within these levels. For example, as the market was trading up into 61.8, 70.5, and 79, I would have been looking to sell this market if there was other things correlating with it. I don't just use the fibs to solely base my entries or take profits off of. I use them to align with other levels. So you're going to want to look for confluence with those levels with other price levels in the market. So if you don't know what confluence is, it's just like multiple things lining up together at or around the same price level, and that's something that you're going to want to focus your attention on. You'll know that it's a key level if multiple things line up with that specific price level. So for example, say this 100% retracement level lines up with multiple other things on other time frames, we would know that this 1.00402 level is actually a key level that the market is using. As the market was trading into these levels, 61.8, 70.5, and 79, I would have been looking to sell if there were other things that were lining up with the market, but we know that that wasn't the case. We did make a full 100% retracement on this. So keep in mind that this is a perfect example of why you can't use Fibonacci to solely base your entries off of, right? Because if you were just using Fibonacci and not using other things in your analysis, then you would have simply sold it right here at 61.8, 70.5, or 79 and would have gotten stopped out immediately, and you wouldn't have seen any profit because it immediately pushed up instead of pushing down. In terms of this particular setup, just trying to use Fibonacci, not using other tools, you see that there was no valid trade. But the key with mastering Fibonacci is you actually have to use it after there's been a breakout or a break in structure. If you guys don't know what that is, we're going to go ahead and go over it right now. So on a daily time frame, there's nothing clear, so I'm going to actually show you guys some examples on a 4-hour time frame. All right, guys, so we know that the market formed a low right here. Once this low was formed, the market started trading higher. So the key with Fibonacci, again, is to make sure that you're waiting for the market to break structure. So in this example, we're on a 4-hour time frame and we're within this swing. Remember, guys, we were just mapping out the swing that we were within on a daily, so you're just doing the same concept on the lower time frames. So right here we have a swing, and this is the current swing that we're trading within, right? If we're looking at the market right here, and we know that this is the nearest low and this is the nearest high, so this is the current trading range that we're within. So in order to use our fibs properly, we need to wait for a break of structure, meaning this high needs to break in order for us to use our fibs in the most accurate way. So let me go ahead and show you guys what I mean. If we play, the market trades higher, market broke above the high here. So then what we can do is we can take our Fibonacci and we can draw it from the most recent low that broke structure. So we know that this high here broke structure because the bodies of the candles pushed up strongly above this high. If you notice, the market just traded up here, wicked above it, and then traded lower. You could have used this as a potential entry opportunity. I wait for a confirmation. My confirmation always has to have the bodies of the candles close above the high or low that I'm looking for. So in this example, we have that here. So what I would do is draw my fib from that low to this high, and what I would do is I would actually be looking for my entries within these levels. And now whenever I'm using my fib, it's after there's a low that's been formed and structure has been broken to the upside. So I'd be looking for buys. So I would just simply wait for the market to trade into my levels. All right, 61.8 was traded into, so you could have bought it here, and then the market pushed up a little bit, came back and formed a higher low. So if you missed the first entry here, what you could have done is you could have actually drawn your fib on this lower swing right here, and you notice there was an entry right here at 79%. So you can use it after structure's been broken or in shorter little pullbacks and retracements like this to get the best entries. But the thing is, I usually always want to enter as soon as it touches 61.8, 70.5, and 79 if I've already had a break of structure. So that's the key thing to make sure that you're looking for. Make sure you have the break of structure. If you don't have a break of structure, you're not going to get an accurate entry as if you did have a break in structure. If you do, notice this precision. 61.8 hit, look at what the market does. Continues to trade higher. Okay, so we would have taken our first profit as soon as this level was traded above. All right, so let's go ahead and map out what our objective would have been. That trade alone would have been 109 pips. Our stop loss would have been below this low at 65 pips. As soon as the market broke back above this high right here, so on this candle as it pushed above, I could have moved my stop loss right here to break even or even below this low. And at that point, I had locked in profit and I had no risk on the trade at all. So this is really important to make sure that you guys understand, because as you're trading, you want to make sure that you're also managing your trade. You don't want to suffer any more losses than you need to. So by putting your stop loss below the low of the swing that you're using for the break of structure, that confirms that more than likely, if you're right on the move, you're not going to get stopped out. So as the market starts pushing higher and forms a higher low, then breaks the high, you can easily move your stop loss here and lock in some profit. So at that point, you could have locked in about 8 pips profit. No risk on the trade, 8 pip profit, and just let it go. And then from there, we did get a little bit more of a retracement. Notice where it came back down to. Right back down to these candles here. So it didn't necessarily come back down all the way to 62 or the 61.8% level, but we did actually come into these candles here, which is a support level. and notice we started pushing higher from there. That isn't the only move within this. Keep in mind, once this high was broken above with these strong candles, that confirmed we have another break in structure. So what could we do at that point? We could take our swing, map it from the low here to the high. We come down into the 79% level, so you would have suffered a little bit of drawdown, but notice your stop loss would have been below the swing low that you're using for the break of structure, and you would have never got stopped out and you would have locked in some profit. So let's say you entered at the 79% retracement level, you would have sat through 21 pips of drawdown and your profit would have been 126 pips if you got the full move. I probably would have taken out my profit as soon as we reached above this high, which would have been 113 pips. So if we're risking 20 pips, 113 pips profit is a really good objective. So that is essentially how you're going to use your fibs, guys. Always make sure that you're using them after you've had a break of structure, and don't just use your fibs as something that you're going to base your entries off of alone. You need to use other tools to confirm that those fib levels are accurate and actually levels that you should be trading off of. And how I do that is simply by waiting for the break of structure after I've had the market trade into a key support or resistance level, and then it's game over after that. I know that I've pretty much got a read on the market and I know what they're going to do. So that's how you guys can do the same. If you guys don't already have a copy of my trading plan and the things that I actually look for in my trading, make sure to grab a copy of that. The link will be right below in the description. And if you guys enjoyed this video, make sure to leave a thumbs up. And I'm also curious, do you guys use Fibonacci on your charts? Is it something that you used before, or is it something that you haven't really messed with too much and you're looking to use a little bit more in your trading after watching this video? So hope you guys enjoyed it, and I will see you in the next one.
After this track, I might need me some lozenges. I ain't about to go soft. This rapping shit lately been pissing me off. Guess these words are kinda just at the tip of my tongue, but I'm still young and I hope I find the rhymes that'll live through time before that fat lady has sung. Cause when I'm inside this booth, feels like I rule the world. But I'll hop off my horse, hop in your Porsche, give it a